Okay.
Okay. People starting to come through. Hello, Finimizers. Welcome to another Finimize Live. I'm John, lead crypto analyst here at Finimize, and I'm hosting today's event with our partner Bit, who are a crypto exchange, and we're going to talk about how to manage crypto volatility in different market conditions. And obviously the market's changed quite a bit recently. So first, before we do that, we're going to go through the usual housekeeping rules. As you're coming in, please fill out the poll if you do see one, and then also introduce yourself in the chat. Tell us where you're tuning in from, and remember to switch all attendees on, not just panelists, and that way everyone can see your messages. This is a 15-minute conversation. I'll ask questions for 15 minutes, and then you'll get to ask your questions for the next 15 minutes. And you can use the Q&A box down below to do that. And if you see a question you like from someone else, you can upvote that, and then it moves to the top. That way we can get through the most upvoted questions first. So let's kick this off. For this event, as I've said, we've partnered with a crypto exchange, leading options trading platform called Bit. And Bit is a digital asset exchange where users can buy and sell a range of crypto investments. They can do this by trading the actual assets in the spot market or through derivatives products like futures and options. And that can be for hedging or for getting exposure to crypto's more volatile moves, which we've obviously seen without having to actually own the underlying assets. So I'm joined today by Bit's product lead, a financial product lead, and that's Ruolan Wang. Ruolan, how are you doing today?
Yeah, I'm doing well, thanks. Yeah, it's getting a bit late in China, but yeah, glad to be here.
Yeah, you did say it was very late where you are. 1 a.m., right?
Yeah. I'll try to stay awake.
I'll keep the questions punchy. So let's dive in then. I mean, first things first, I'll just give a quick update on the markets. Obviously, last year, 2022, we saw a lot of downward price action in crypto. A lot of that was to do with, the macro side of things. Also, there was a lot of leverage in the system, and you kind of saw, that leverage is all interconnected, and you sort of saw a big washout in the market. This year, things have been a bit different. There's been a different narrative that the market's interpreting from the Fed and what they're going to do with interest rates. And it seems things are going a bit more risk on. That's nice, but obviously that said, you still need to pay attention to risk management no matter what the conditions are, because crypto is very, very volatile no matter the market. So I think we're going to move on straight into that. And, just to kind of give some background, there's two kind of ways you can make money in crypto. It's you can invest or you can trade shorter term. Our community is a lot more longer term, so we're going to focus more on the investment side. And then firstly, I mean, before we get into the kind of derivative side, maybe just touch a bit on diversification, where you see crypto kind of fitting in a portfolio, and then within the crypto allocation, how you see a possibility to diversify within that.
Yeah, thanks, John. So when it comes to diversification, crypto is no doubt a risk asset. I would say it's much riskier than the traditional risk assets we have seen from the traditional finance side. So if you compare crypto to commodities, to equities, crypto, we definitely have seen bigger volatility in crypto space. So I think there's no magic number that is suitable for everyone. How much of your capital you want to allocate that to crypto? It will purely depend on what's your risk tolerance, what's your return objective. But comparing to other traditional risk assets, if you think about equity markets, for example, S&P 500, which is down by more than 10%, more than 15% last year, and commodities, for example, price driven much higher because of the inflation we have seen. Crypto indeed appears much cheaper. So I think there's values in good opportunities to be picked up there. Because of what happened in 2022, the fall-offs of FTX and Alameda Research and so on and so forth, the underlying fundamentals of the blockchain technology I think is overshadowed by those bad news. So the investment thesis for this asset, I don't think has been too much fundamentally changed. So I think, in my own opinion, 5% to 10% would be reasonable for a medium risk portfolio. In terms of how you diversify within this sub portfolio of the crypto of crypto baskets, I would for sure put money in Bitcoin and Ethereum quality tokens, which is acting like a benchmark for the crypto as a whole. When it comes to diversification for Bitcoin, Ethereum, people normally look at altcoins. But for this year, I think personally, altcoins faces more headwinds because the FTX collapse has a bigger impact on altcoins than quality coins. So investors, they will have to make more effort to find value projects and to invest in them. For Bit, we like, for example, Toncoins because they are backed by Telegram. We see a growing community in there, so a growing use cases for Toncoin. And for example, XRP as well. That's the coin for the Ripple network. We see a growing use cases as well. What Ripple has been providing is facilitating. So one of their service they are providing is to facilitate cross-border transactions. And we also think the liquidity for the coin is better than many of its peers. So that's the reasons we prefer those coins. But for investors, I think you can find value projects and dive into these pool of new projects and find values there.
Yeah, I mean, it's like you say, it depends on your risk tolerance. Obviously, the bigger the crypto, so Bitcoin and Ethereum, bigger cryptos probably have less risk attached to them in terms of volatility. And then as you go further down in terms of market size, there's more venture risk attached to them, and they become a bit more speculative. Then, they haven't proven themselves as much. So I think obviously it depends on how you want to play it in terms of risk. And then, yeah, I agree with you on the diversification thing. I mean, definitely it's behaved a lot more like, stocks and risk assets lately. Maybe that changes in the future as the market gets bigger, but for now, because it's a small market, it tends to do well when the markets go risk on. Thanks for that. So the next question, I think, obviously we've seen the market rally this year. We've seen Bitcoin up 40% in January. And everyone's getting very excited. Personally, I'm enjoying seeing a bit of, upside moves in the price. But that said, obviously risk management is still always important, and there are ways to manage risk, which isn't just through diversification. For example, if you only wanted to own Bitcoin, you could manage risk through futures or through options. Could you just perhaps break down, what futures are in terms of perpetual futures that trade on crypto exchanges, and then also after that options, and then from there we can kind of talk about how they can be used for hedging longer term positions.
Yeah, sure. So perpetuals is a quite unique product, only existing in the crypto space. Basically, it's a futures contract, but without an expiration date. So for the traditional futures contract, if you are already an investor in the traditional finance world, you might be familiar with futures contract. So you basically lock in the price in the future, and when the maturity date comes in, the futures price and the spot price, they converge. But when it comes to perpetuals, it will always track the underlying spot price because it doesn't have a end date. So that's the main difference between perpetual futures and the traditional futures with the expiration date. So for options, it's getting more and more popular in the crypto space as well. So options gives you the right, but not the obligation to trade the underlying asset. It's not 100% correct to compare that to insurance, but in some ways they work similarly. So you pay the premium upfront, which is the price you need to pay to buy to get into this contract. And if the market goes in your favor, you can profit when the option expires. But if the market goes against you, you won't lose more than the premium you paid upfront. And this is very different from perpetual. So for perpetuals, if the market, let's say if you bought perpetual, if you are in a long position, market goes up and you will profit from that. But if market went down, you will lose. Depend how much market go down, you will definitely lose probably more than the premium you paid upfront for an option.
Yeah, so the risks are different, obviously. With options, you're paying something upfront.
Yeah,
that's your maximum loss. So you're willing to take that loss if things go against you. And then with futures, you're effectively just betting on what the price will do. Let's say you go long, you can use leverage. Obviously crypto is volatile enough, so it's not always a good thing to do that. But if the price moves against you, you'll lose effectively the percentage times whatever leverage factor you would use. And it obviously works the other way around to the upside. So with that, there's obviously ways to manage risk, like using a stop loss and things like that with futures. So in terms of actually using, I think we'll say with futures, but in terms of using futures to hedge a position, could you just talk a bit more about that? Let's say, I've got Bitcoin and I want to hedge that with futures. How would I go about doing that?
Yeah, so if you already holding the physical Bitcoin, and you will be looking to hedge the downside risk, because you will lose if the value of Bitcoin declines. So basically, you will need to sell futures to hedge against that. So if the Bitcoin price goes lower, your physical position will be bleeding. You will lose money on that, but your hedge will make you money. So all in all, you will be protected from price going against you.
Yeah, and then the trick is when to let go of the hedge, because obviously you've got to know when to take that hedge off to get the upside, which is where the kind of tricks, the difficulty comes. But then, to the downside, if you want to hold on to the Bitcoin and not actually sell it, then definitely that can be used. And then with the hedge, you'd want to keep the position, I guess, the same size as the position. So it's not, you're not overly hedged. You don't have too big a position to the downside versus what you hold on the upside, because then you're effectively going short and betting that the market will move down and trying to profit from that. Options, the next one. There's obviously, that can be a bit more complicated, building different strategies, but maybe if you can touch on that.
Yeah, so if we look at the same scenario, we already have a long position of the physical coin. Normally, the classical way is to buy a put option. So for a put option, you pay again the premium upfront, and when the price goes higher, you still can enjoy the upside potential. That's different from the futures we talked about. And if price goes lower, again, you will lose money on your physical position, but the put option will be in the money when it comes to expiration. You will have a positive payoff to reduce or eliminate the loss you had on the physical position. But some investors may not like the idea of paying a premium upfront. So we have seen strategies like they buy a put option, but they sell another call option to finance the purchase of the put option. So the strike of the call option is higher than the current market level. If the market goes beyond the strike of the call option they sold, they don't mind. They don't mind to give away their Bitcoin. So basically, that strike of the call option is the take profit level. Yeah, it is our take profit level. And if the call option doesn't end up in the money, you keep the premium by selling this call option.
Yeah, I mean, you can do a lot of interesting things with options. Yeah. You can set up all kinds of payment structures. I mean, I think that the easiest way to think about it is, like you said in the beginning, it's just insurance. So you're paying a set premium. That's for downside protection when it comes to hedging, and you're willing to lose that if it goes wrong, just like you pay for insurance. And then you lose the premium effectively if the price keeps going up and your option doesn't go in the money. Yeah, I mean, I've kind of asked quite a few questions on that. Just some of the risks, I mean, to be aware of with futures is that you do pay a funding rate. So, that is something to be aware of when using them. And then with options, you pay a premium upfront. And there's a few other things to understand. I'm just going to move on now. We've got quite a few questions from the audience, and I'm just going to open them up. We've got 8 so far, and I'll start off at the top. So not related to derivatives per se, but what are your thoughts on kind of hardware wallets, given the risk with online exchanges?
Yeah, so it's an interesting question, because what happened last year, we've already seen evolutions going on within the CeFi industry as well as the DeFi space. So for us, the centralized crypto exchanges, we already working on to provide more transparencies in terms of our asset and liabilities. We already seen the few traditional Main Street CeFi exchanges providing the proof of reserves, and we are working on that as well. And we also participating with third-party custodians to meet especially the need from the institutional clients, because some of them they may want to have their funds to keep off exchange. So we will go live with Copper, for example, and Fireblocks. They all trustworthy third-party custodians, if that's the client prefer.
Yeah, I actually know Copper. I used to run a fund, and I've met the founder. So I think that's true, because obviously with crypto exchanges, I think to put it into context, when they first started 3 or 4 years ago, they used to custody and run the exchanges from the same place because we have other options. But now they've got their own, now they've got independent third-party custody providers who can actually, which is more the institutional traditional way where they keep things, off the exchange and have a third party. So that is the way things are moving. And I think it's good that exchanges do move towards that. The next question is ARK recently, well, I've actually got a view on this too, but ARK recently predicted Bitcoin could hit 1 million by 2027. I think it was 2030. Is this plausible, in your opinion?
Well, I don't have a specific number in my mind, but I do agree that things look much positive this year. So it's interesting what happened last year. I think this is the first time we have seen a crypto winter coincided with a downturn in the traditional finance world. So because crypto has only been around since 15 years ago, this is the first time it happened. And this year we have seen the macroeconomic has been becoming more and more accommodative, and also the what happened last year in terms of FTX collapsing, Alameda fall-offs are getting well. We see evolutions to overcome what happened last year. So I think the picture looks more optimistic this year. I would say it will be a bumpy recover, but 1 million, I'm not sure, but this year I think it will be around, it could get to 40,000, I would say, 40 to 50,000, but in a bumpy way.
That's interesting, because that 50,000 is the 0.618 Fibonacci from the peak in November all the way to the bottom, if that was the bottom, which would be very, very match what happened in 2019 when it had that rally up to 14,000. I mean, in terms of Bitcoin getting to 1 million, the only way that, the way you think of that is kind of gold is, if it had to get to the market size of gold, perhaps it would be valued somewhere around there. It's obviously just about timing. Very hard to predict that. But yeah, I agree with you. What kind of, I think you've already answered the Bitcoin question. Where do you, I guess there's a lot of talk about Ethereum versus Bitcoin right now. There's talk of Ethereum eventually potentially overtaking Bitcoin in market value. What do you think of Ethereum in terms of its capabilities and kind of how do you expect it to perform, assuming Bitcoin were to do well?
The merge so the one big topic for Ethereum we have seen last year is the merge. So Ethereum transformed from a proof of work coin to a token to a proof of stake token. So the advantage of this transform, I think it hasn't been really unfolded because of the series of collapse we have seen last year. So I think from this point of view, Ethereum do has a potential to catch up faster or recover faster than Bitcoin. But not in the short term, but in the medium to long term, I would say maybe 2 to 3 years. But for the short term, for the next, let's say, a few months, I think the hangover of the FTX collapse will still be around. We may see further follow-ups of other, say, lending firms. So I will be cautious for the short term, but I do think Ethereum at the moment it has a brighter future in the medium term.
Yeah, and I mean Ethereum, when it moved from proof of work to proof of stake, it was such a big technical thing, and it did it without a hitch. So it was, a very good thing. Yeah, I also do like Ethereum personally, longer term. The next question, interesting one here from Rafael Mendez. Will the big whales attack Bitcoin to lower its value? I think they already do that a lot. What's your take on that?
Sorry, John. Can you repeat the question?
No, the question is from Rafael Mendez, saying, there's the big whales, the big money in crypto. To what extent do you think they manipulate the market? Personally, I think they do a lot because it's a small market. So what extent do you think they do?
To what extent?
And drive its price lower to kind of fill their position so they can run it the other way and profit?
Well, yeah, it's an interesting question. So, yeah, it's hard for me to comment. So I think, yeah, maybe John, I'll let you explain your opinion on this one.
Okay. So yeah. I don't think they necessarily manipulate it, but I think they take a lot of time to fill their positions. So, the bottom we've kind of seen now over the last 6 months, if you've got a lot of money and you want to invest it in a small asset, you need a lot of time to do that. So you have to slowly, gradually accumulate. And that's what they kind of do. And then once they've accumulated, they will take longer to sell it. So while it's not, manipulation, it's just that the way that they invest, it drives the prices of the market because they have to take so long to actually fill their positions. Whereas anyone else can just buy half a Bitcoin, and it's not going to move the price. But for them, they don't want to move the price until they're ready for the price to go up or down. Where do you buy futures options in crypto? Well, I mean, on Bit, you can do that. Also asking about Coinbase. As far as I know, Coinbase don't do futures. And then there's obviously a whole bunch of other exchanges. The next one from Ashi, how does a Bitcoin halving play a part in the expected volatility of the future? I'm happy to take that if you like.
Yeah, go ahead.
Okay, so the halving's probably 61 weeks away. And typically in the past, that's been it's a big event, so it does tend to there's a lot of excitement about the event, and typically people tend to accumulate leading up into the halving, and it happens every 4 years, and that's usually when we've seen Bitcoin run after the halving. Obviously, there's only 3 iterations of that, so take it with a pinch of salt, but that's what history's done so far. Next. Oh, okay. What's your opinion on buying 2 hardware wallets, a backup plus a fire and waterproof protection one? Steel. So I guess risk management, it's good to have 2 wallets or 1 hardware wallets if you're in crypto.
John, yeah, if you can answer that, yeah, if you can take on that as well, because
okay.
We have quite a professional security colleagues. I think that they are more suitable to answer these questions. So for now, I probably delegate that to you if it's okay.
Yeah, I mean, I just think it depends on. There's risks to everything, right? There's risks to hardware wallets because you have to remember your seed phrases, and you have to store your passwords in a way that you can't get found and they can't get taken. With exchanges, there's other risks. So it's not all risk free, and it's not all super. Sometimes it's convenience, and with an exchange, they're also looking after your password. So yeah, I think it's good to have it spread out among different storage methods is probably a good risk management technique, because then if one thing goes wrong, you've got other places where it's stored, even though it might be more cumbersome to keep a lot of different storage methods. We've got 2 more minutes. So I'm just going to see through here. It's an interesting question here. I think, is selling options riskier than buying options? I guess it depends on what the market does and how much the size of the position, I suppose.
Yeah, so the question is that, yeah. So buying options, like we said earlier, it captures your downside, but selling options is actually embedded in a lot of trading strategies nowadays. And for example, the structured products you invested in also involve selling options. So I think it depends on how you utilize the sell of options. If you are comfortable with, for example, sell options as a way to buy the dip or sell the high, I think it's a reasonable strategy to do it compared to setting stop loss and take profit by using futures. You can possibly enhance your yield of return by selling options. But again, yeah, the risk it could be unlimited by selling options if the investors hasn't been really understand the risk associated with selling options.
Yeah, and then also I think probably with crypto, the kind of premiums are maybe higher sometimes because the market's smaller, but as the market grows, the options market will probably develop a lot, I would say, and it'll become a lot cheaper to even use options also. The premium should come down.
Yeah.
Yeah, well, that's good. We've had quite a lot of questions here, and there's quite a few more. Apologies, we can't get through all of them. It's time. Thank you. We'll try to follow them up. You can get in contact with Michelle, and we'll see if we can get to those questions afterwards. So yeah, that's a wrap. Thank you for attending. Hope you really enjoyed it. It was a very good conversation. Don't forget to leave your feedback, and thanks, Ruolan, for a good conversation, and take care.